The Philippine Central Bank has cut its key rate for the fifth consecutive time as inflation remains benign. The easing comes at a time when outlook for growth weakened as the nation grappled with a deepening corruption scandal linked to flood control projects. The benchmark rate cut by 25 basis points, bringing the rate to a three-year low of 4.5%. Inflation has averaged 1.6% so far this year, below the central bank's target of 2 to 4%. The peso trading around 59 to the greenback. And here's a look at the impact of the exchange on the economy.
Hello, kamusta? Anong ginagawa niyo?
As the breadwinner of her family, Mary Grace Temesis has been sending half of her salary home to the Philippines for the past 12 years she's worked in Singapore. She watches the Philippine peso closely, and these days she's happy about where it's headed.
Masaya siyempre mataas yung palitan. Siyempre pag mag-send ka ng pagdaan sa Pilipinas, malaki na yung nun, di ba? Yung peso.
But while a weaker currency can boost the domestic value of remittances, it can also drive up the prices of everyday goods.
Kasi kahit tumaas talaga pagdating sa Pilipinas, halos lahat talaga, yung mga pangangailangan mo araw-araw, talaga siya mataas, parang yung mo dun, yung 1,000 mo, wala nang halaga doon.
Overseas Filipino workers, or OFWs, like Ms. Temesis, have been supporting the peso from global shocks through monthly remittances, which totaled a record $38 billion last year. But the currency tumbled to an all-time low against the dollar at the height of a corruption scandal related to flood control projects in the typhoon-prone country. The peso has since recovered, but concerns over its stability remain as allegations of endemic corruption rock investor confidence. Government data shows the value of approved foreign investment pledges falling by almost half in the third quarter from a year ago.
All eyes on, how much is being reallocated from those anomalous projects, the allocations there, into sort of other types of infrastructure projects which can be implemented relatively quickly. So these kinds of steps, I think, would be super important in the near term to sort of send a signal that the quality of spending is not just going to improve, but improve on a more sustained basis.
Public spending crawled last quarter as stricter validation processes delayed funding for government projects. Household consumption, another key growth driver, fell to its weakest since the first quarter of 2021. Banks have slashed their GDP growth forecasts for the fiscal year. But analysts say the BSP could be approaching the end of its rate-cutting cycle.
The BSP is stuck between a rock and a hard place right now because at the moment, the engine of counter-cyclical policy that should be working is fiscal policy. But fiscal policy's hands are tied at the moment. And the BSP has done its fair share in cutting rates since 2024 into 2025. And now I think the potential to lower rates is starting to hit its limits. We don't think that rate cuts are really going to help boost consumer spending as much as a return of confidence will and a greater clarity on the fiscal side.